Well, that's right. As we enter a whole new week in trade, let's take a look at the global cues over the weekend. Now, the US particularly is still losing. The futures are down this morning around 115 points, so no reprieve from the massive sell-off we saw last week. Of course, last week was the worst week for the US benchmarks since October, and a lot of volatility has been sprung because of all the Reddit traders that are currently longing GameStop stock as well as silver. And silver futures are up 7% this morning because of Reddit traders, actually. So a lot of volatility, a lot of euphoria that's spooking a lot of institutional investors. Platforms like Robinhood have now laid a restriction on the amount of GameStop shares that can be bought to one share per trader per day. So that should help ease some of the short squeezing that we're seeing and hearing all the funds complain about. Last week, the S&P also fell 2% to 3,714, and the Nasdaq also fell 2% to 13,070. So we've seen a massive sell-off. Apple shares last week fell 3.7%. Other major tech names slipped as well. So very tough market week. And if you look at the start Monday morning, futures still pointing toward a negative slant. Now, Asian stocks are a bit mixed this morning. In Japan, the Nikkei opened and rose about 1% at open. The Topix was up 0.9%. The Kospi in South Korea was up 0.40%. However, the Australian S&P ASX 200 dipped around 0.5%. So some mixed market action today. And of course, those Chinese stocks have also been taking a bit of a breather, whether you look at the Shenzhen Composite, the Shanghai Composite, or your mainland Chinese stocks. European stocks closed lower on Friday. Jitters persisted over this whole retail trading frenzy, and that spooked investors. The stock 600 was down 2% for the benchmark on Friday, and then the retail stocks shed 2.6% to lead losses, while all sectors slid into negative territory. So equities weren't looking too good at the end of last week. Now, what's happening with oil prices as of this morning? WTI has slipped below the 52 mark. On Friday, we closed at 52.20. Now we've slipped below that because the Chinese demand outlook is really wavering. Brent has also slipped below 54, or just about 54.20, I think, and it closed at 55 last week. This is despite Saudi Arabia saying they're going to cut production and a fall in US oil inventories. So it doesn't really matter what the inventory position is or what the production situation is. For now, demand just seems that it's not going to be too strong. The contract last week for oil futures registered its second straight negative week. We're starting off this week on a negative keel as well. Gold prices and silver prices were the only region bucking the trend. On Friday, they both rose. Spot gold was up 0.6% to $1,851 per ounce, and US gold futures settled up 0.5% to $1,850 per ounce. This morning, silver futures are currently up 7%, like I told you earlier, because of the Reddit traders going long on silver and using it as a hedge against any volatility that might creep up in the near term. So those are the global cues for this morning.